Hey folks, Dan Frio here, the rate update. Today is March 18th, 2021. And in a nutshell, what we're going to go over here in a second is the markets don't believe the Fed. So find out more. Don't go away. Okay, so yesterday's news, the Fed came out, eased the markets, mortgage rates recovered, stock market went way up, and then we all went to bed. And then we woke up today and everything's changed back to where we were. And here's what I'm getting at, is the markets. So what I mean by the markets, it's like the stock exchange, the people, individually people buying stocks and bonds and all this other stuff. They're painting a different story to all this. The Fed is coming out saying, we're not going to change rates at all. We're not going to really do anything. We're going to keep pumping money into the system, buying bonds, do this, keep the liquidity there. And yeah, inflation's going to spike up a little bit. It won't be permanent. It'll come back down. But then conversely, they came back and said our GDP is going to raise a ton higher or better than what they were expecting. So then you're thinking, well, how if the economy is going to go really well and we're pumping all this money into the system, there's got to be inflation, right? So there's a catch-22 there. So it's what the Fed is saying and then what the markets are reflecting, okay? Mortgage rates are tied to what the market's doing, not what the Fed's doing, because the Federal Reserve controls the federal funds rate. That's it. Okay, the federal funds rate. That's what banks lend each other. That's the cost for that. They don't control mortgage rates or anything like that. That is calculated or factored through or created through the markets. Okay, what I mean by the markets is what people and investors are buying and selling. So let's dive down this area so I can explain this a little further for you. Okay, so you see here, mortgage rates moved sharply higher, but homebuyers competition is fiercer than ever. There's millions of people out there that want to buy homes, and even with rates going up, they're still like, I still want to buy a house. I got to get out of my apartment, or my house, the walls are coming in on me. So that's the headline news. Now, what the caption of this article is watch out for fake rate news, and here's what we mean by that. Okay, so the studies show, and this article is I just posted this all through all the social media. This article says when a lot of news media and the media is trying to figure out, how they're going to spin mortgage rates for the week, they send out a questionnaire to a lot of bankers and such, and they send it out on Monday, and they get all their responses back by Wednesday, okay? And then they publish their data Thursday, Friday, Saturday. Well, the market or mortgage rates are like stocks. I mean, they're going like this. So Monday or Tuesday, the rate might have been down here, and Wednesday or Thursday, like today, and I'm going to show you those numbers, it's crazy. Rates just spiked, okay? But if you go out into a lot of these areas, you go out to websites and they're giving you mortgage rates. Again, that mortgage rate might have been the day that they published on that site. It might have been a rate that they could have given you on that day. That day, not today, that day. Okay, so you might go scan all over the websites and say, oh man, I can get a rate at 2.875 with no fees. You saw that today, but it was published Monday. You can no longer get that today. It's like me selling, the IBM stock or Google stock is $100 today. It's not. It's just an analogy. It's $100. I'm publishing it saying it's $100. Well, it was $100 on Monday. What's it today? Because it doesn't matter what Monday is. It matters what I can buy it for today. So people are driving themselves crazy, going all over the websites and finding these things and applying here and applying there and applying everywhere. Everybody's going to pull your credit, then you're going to get another quote. So what I'm getting at is, I have no problem competing, and you guys as consumers out there shopping around. But the problem is, if you got a quote on Monday, and now you're still shopping around, and it's Wednesday or Thursday, that rate you got on Monday no longer exists. Even if you were with me and I didn't lock you in, your rate's probably higher today than it was on Monday. So a lot of people are driving themselves crazy. They're wasting a lot of time and a lot of money, and you could be affecting your credit scores by doing all this stuff. And I get it. You want to try to find the best deal in town. But I'm giving you the backdrop of, you might be chasing around and losing out in the meantime, because if everybody pulls your credit scores are going to go down. You delaying, what you could have gotten on Monday is a lower rate, and you're shopping around Tuesday, Wednesday, Thursday, Friday, and then Friday you go back and you get another quote. It's higher than that, so you go back to the other lender that you got a quote on Monday and say, okay, lock me in. Can no longer get that rate. So please be careful. So that's what I want to basically post in this article right here, and I'll put a link down below in the description on where you can get my newsletter here. But it's basically saying that. It's saying all of these companies, they put out their data. Even if you go to those websites and try to find mortgage rates, best rate in town, you go to bankrate.com and all those other ones, they're gathering rates. Usually on Monday, Tuesday, they publish those, and they don't republish those for the following week. So be very careful on checking those rates. Also, you're going to have the opportunity cost if you keep delaying and you keep calling around and you have a day like this. You're going to lose out. Okay, so let's get on to why you came to the channel. You came to the channel. Most people come to my channel. They want to see this. What's going on with mortgage rates? Okay, well, this is a terrible day. And we're going to dissect it a little bit, but minus 42. So what does this mean to you? Well, minus 42 is what happened to the price of a mortgage-backed security bond. This bond is basically determines your mortgage rate, that with what we call loan level price adjustments. But this is the biggest component when it comes to mortgage rates. As the price goes down, and this is a substantial down, when the price goes down, your rate goes up, okay? This is a big move. So this could equate out to possibly an eighth or a quarter increase in your rate today, okay, today. So if you shopped around, let's go back to here, okay? Again, as this goes down, rates go up. So this is Thursday, Wednesday, Tuesday, Monday. So here's where we were on Monday, okay? So you shopped around, you got quotes on Tuesday, and then Wednesday, and then Thursday. And you get here, and then you're like, okay, well, they were offering me $299. Now everybody else is offering me 3.375. Well, heck, I'm going to go back to this one and go ahead and put the application in, lock, and move forward. Well, it's gone. Think of it as a stock. It doesn't matter what that stock price was on Monday. You can no longer get that stock at that price. So this is where a lot of people are shooting themselves in the foot. I get it. We all search around for the best deal in town, but please don't put it off too long. If you like what you see, I always do this with my cars. I'll shop around, then I'll buy a car. I quit looking because I don't want to get frustrated with that. Okay, with finding, oh man, I could have got that car for $500 cheaper or whatever else. So that if you like what you see, especially those that you come to us or you come to me for advice. Trust me, guys, I'm issuing you the best deal I can right out of the gate. I don't like playing the car. I always say the used car salesman mentality. Oh, here's my rate. And then you go out and you find this, and then you come back to me. Oh, okay, I'll lower the rate. Then you go back to them, and they lower the rate. I give you my best shot at the first crack. Mostly YouTube viewers, I'm always giving some kind of incentives. So when you call in, ask, hey, what's Dan's incentive right now? Well, a lot of times we'll waive your underwriting fee. We'll waive this. We'll pick up your appraisal. We'll give you a discounted rate. We can't do all of that, but we'll give you, the benefit of the doubt in one or two of those areas. So you reach out to us. We give you the best shot right up front. We are transparent. We're giving you everything right up front, and we don't play the car salesman game. We're giving you, the best shot right out of the gate. So that's basically, where we are, we went today. Let's dissect on the intraday where we went throughout the day. And the nice thing is, right through here, we're recovering. So we were up, we dropped back down, but the green candlesticks mainly represent there's more buyers than sellers of the bond. So as people buy and buy and buy, the price goes up and the rates come down. So we had a nice run through here. Look at it. But we're still down 42 on the day. So we were way down here. Let me go back. So we've had a nice rally. So I just issued a couple quotes saying, hey guys, here's what I can get you right now, but I still feel in the next couple days we're going to rally back a little bit, and we're going to rally to an area, in this realm right here to where that red line is. So let me dissect this real quick. I won't bore you to death. All these lines, they're called we call them Fibonacci levels. Those should be basically resistance levels when you're looking at when you're looking at anything. You're looking at a stock, you're looking at bonds, you're looking at anything. The prices fluctuate, and usually they fluctuate within a range. So if you're into cryptocurrencies, that's another area where you can see, okay, here's what this is going, here's the technicals behind it. I'm not asking you to learn all this stuff and study this. I do it on your behalf because I want to give my clients the best experience, the lowest rate, and the best fees possible out in the market. Is there going to be somebody out there that can beat me? Absolutely. If you call 1,000 places, somebody's going to beat me. But I hope to be your one-stop shop. You can trust us. We're transparent. You can get a hold of somebody at all times. You can text, email, and everything else through that entire process. And you're a client for life. We'll continue to monitor your mortgage. And if we find a sweet spot a year from now, 2 years from now, 5 years from now, and saying, hey, this might benefit you to refinance because of this, we'll reach out to you and let you know. Most lenders aren't going to do that. They want you to keep you at that higher rate. We want you to be in the best position financially as you can any part of your life. Okay, so that's this part of it. So we should be trading within this realm. You can see we basically went from here and crashed. So we blew through the Fibonacci levels, and we're kind of just throwing those out the door right now. We are in unprecedented times, people, and it's very hard to monitor this, study this, because things aren't trading or going in patterns that they normally go into. Okay, some of the news that was out today, I thought it was going to be actually good for the markets. Jobless claims. We expected 700,000 people for new initial jobless claims. It came in at 770, 10% higher than what was expected. Continued jobless claims continue to go up. Look, it's a big number. Philadelphia manual. So those are the things that we're studying. So if you look at all this, you're saying, who's right? Is the Federal Reserve right by saying, we don't really, we see the GDP growing, but until a lot of people are back to work, we're really not going to worry about it. You have millions and millions and millions of people out of work. And because of that, you're not going to see permanent inflation rising and staying there. You're going to see a blip in the radar. Like when people get their stimulus checks, they're going to go out and buy. That's going to create inflation short term. What is it going to do in the next 6, 8, 10 months? Well, their expectations is it's going to ease. So that's the battle right now that we see. But that's represented in here. Okay, what I was talking about is the Fed says they're not going to do anything with mortgage or with rates, and they're not going to do anything at least till 2023. The markets, as the 10-year Treasury moves up, that is stating they don't trust or they don't believe the Fed is going to wait another year and a half or 2 years to start raising rates. They're going to do it probably within this next 6 months, 6 to 12 months. So that's why you're seeing a rapid rise in the 10-year Treasury. Okay, so we monitor this for inflation. I don't usually monitor this for mortgage rates because a lot of people say, Dan, why are you talking about the 10-year Treasury? You always say that has no implications when it comes to mortgage rates. It technically doesn't have a direct correlation, but has an indirect correlation with that. Okay, so hopefully that makes sense. All right, so now let's get on to what rates are doing today. So this snapshot is truly what rates are doing today. It is not one of those websites that you go to and it says, here's what the rate, and then when you go to call it, you can't get that rate because that rate was available Monday, but it's Thursday and you can no longer get that. So let's see what's going on with rates. This is the national average. This is not my rate. To get my rates, everybody's a little unique. What is your credit score? What's your loan type? Where do you live? What kind of house do you have? What's your loan amount? Are you looking to pull out cash or do a rate and term? All these are factored into your mortgage rate. Okay, so I need all those pieces of the puzzle, to be able to quote you an accurate rate. But this is generically where rates are. So if you go in this and you're like, oh man, my rate is much higher than that, well, you might have a little bit worse criteria, meaning you might have a lower credit score than this is representing. You might be pulling out a bunch of cash. You might be looking at an investment property versus this is a single family primary home. So there's reasons for that. If your rate is a lot lower than this, be very skeptical unless you're locked in. Even if you're locked in, look at the costs. I have friends and family all the time saying, hey Dan, I just got this. Can you match it at least? And I look at it and I'm like, dude, you can't get that. So then we look through the fine tooth, the fine print, and it's like, well, did you know you're going to pay $7,000 to get that rate? Oh no, I just looked at the rate. Don't just look at the rate. You have to look at the whole package. And I'm going to ask you to send me your package of your loan estimates and other things here in just a little bit so I can review it. And trust me, I'll get back with you and say, you're getting a fantastic deal. It's locked, run with it, don't worry about it. Or you realize you're paying this much money for that rate? Why don't we get you this rate with no fees, and your break-even point is going to be 6 months versus 18 years. Okay, so let's get on to it. 30-year conforming, jumbo, FHA, and VA. We're at 3.3, 3.2, 3.3, 2.95. Okay, so that's generically where they are today. A one-day delta means a one-day change. This huge run that we saw isn't reflective in these yet. But a one-day delta, 7-day delta, 4-week delta. Delta means change. So from yesterday, rates went up 3 basis points, which is 0.03. So really irrelevant. So basically in the last day, there's been irrelevant changes, really nothing across the board. Here's where we're starting to see some things in here. So since last week, rates have gone up 0.11 on conforming, conventional, same thing. 5 basis points, so 0.05, 0.07, 0.08. Not a much of a change at all. Where we're getting it, and again, guys, today's numbers haven't reflect in this rate yet. This was published around noon. So a lot of this didn't get correlated into or pushed through to today's rate here. We'll see that tomorrow. But within the last 4 weeks, so within the last month, you can see we're up about 33 basis points, 0.33, almost across the board in all these rates. Okay. The good news is still where we were last year at this time. We were running around the 3.8 range. On a lot of this, other than the VA, which was about 3.5, we're still below, about 50 basis points below where we were last year at this time. You push this data a little bit farther out, and we were running between 4 and 4.25. So we're still about a percent lower than where we were a year ago. So if you're in a forbearance, for example, and you're coming out of the forbearance, let's look at that to see if we can refinance you, maybe and take you from 4.25, 4.5, 4.875, and put you in at like 3.3. So drive down your rate a point and a half, drive down your payments, and in most cases we'll structure your loan so you're gonna skip at least 1 or 2 mortgage payments when we refinance you. Okay, so that's my rates for today. So here's what I'm gonna ask you. If you're building, buying, or refinancing, or you're in a forbearance, okay, I need you to call us, or at least go to my website, or email me your mortgage statement. Or if you're in the process of the mortgage right now, your lender legally within 3 days of pulling your credit, they have to send you a mortgage package. That mortgage package consists of 3 pages that are extremely important. It's a loan estimate. Page 1 is going to give us your rate, your loan type, your loan amount, and a whole bunch of information, if your loan is locked or not. Page 2 is going over the fees. Those are the 2 pages I want. I want the fees because I don't want to be overwhelmed by, oh, that rate's 2.99. That's fantastic. Yours is 3. Well, if mine, the cost is $1,000 and their cost is $5,000, your break-even point in mine could be 3 months. Your break-even point on the other one could be 5 years. Are you going to be in that loan 5 years? maybe, maybe not. So I'm just throwing out some examples to you. So that's what I'm going to ask you to do. So I'm going to give you my website, or the best way to contact us. I'm going to give you a 800 phone number to reach out to us. I'm going to give you websites, my website you can go to and apply right online. I'm going to give you my email so you can send me your mortgage statement, your loan estimate, whatever you do have. One big thing is, please give me a thumbs up, subscribe down below, and hit the bell so every time I post a video, you get an alert. Our views are about 8,000 a day. Thank you guys. Thank you for reaching out, clicking the subscribe, clicking the buttons, and viewing my videos. So let's get out on how you can reach me. The best way to do that is go to therateupdate.com. And you're going to scroll down here. This is our 800 number. That's the fastest and easiest way to get a hold of us. 844-775-LOAN. That's the easiest way to remember it. 844-775-5626. Another way you can do this is right here on the website. There is a calendar on here that you could schedule an appointment to talk with us, either via Zoom, phone, however you deem that the best way for you. You could pick a 15, 30, or 60-minute consultation. We'll go through any and all questions you have. Trust me, this isn't a sales call. It's basically us gathering information and being your consultant to guide you through a path. If you're buying a home, what's the best way to do this? If you're building a home, we got people freaking out because their houses aren't going to be built for 6 or 8 months and they can't lock in with their current lenders. We have programs, not in all states, but in many states, you can lock up to a year on that rate, and you have a one-time float down. So if the rates go down and down and down, and we're getting closer and closer, we're within now 60 or 30 days of you closing on your home and rates dropped, we have a one-time float down where we can float that rate down to market rates at no cost to you and take advantage of that. So you have a win-win proposition. You can lock in now for a year. Rates go up, you're locked in. Rates go down, you can get that lower rate. You got nothing to lose. The next way is send me your loan estimate, send me your mortgage statement, whatever you have that you can send me, email that to me. My email address is dfrio@preferredrate.com. Other ways you can do this is you can hit apply now. They'll take you right to our online application. Click it, it'll take you 10 minutes to get through it. If you're like, I just want to, I got questions, concerns, or whatever, and you just want to click through some things, these are 2 funnels. What these do is it's going to ask you about 12 to 18 questions. Based on the answers to those questions, it'll help me and help you determine exactly what program would be best for you. This might guide us to one area that we didn't even think about. And that's why a lot of people do click one of these. This is if you're purchasing a house. This is if you're refinancing a house. If you just want to reach out and say, hey guys, I need a quote, you're going to click this, give us some information. We'll email you or call you, however you deem us, to be in correspondence with you. We'll do it that way. So you have ample ways to get a hold of us. And that's the best way to do it. So that is the video for today, or the rate update today with Dan Frio. So I want to thank you so much for watching. I got to run. I will see you tomorrow, same time, same place. Take care. God bless. Bye-bye.